Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Dick, how you doing, bud? I just can't help myself, man. See, Dick puts a comment that he almost vomited because I was doing this and doing this. I had water in my ears because I just had taken a shower yesterday. Um, and before I picked my nose, I had actually blown it and made sure it was clear. But yesterday I had water in my ear from showering, so that was, and I forgot to get my Q-tip and clean out the ear prior to recording, but I thought, hey, let's have some fun with it. And so, hey, I hope you enjoyed me having some fun with it. So today, someone screwed up my chair. I think my wife has been in my seat because everything's screwed up in my seat. My whole chair's all screwed up. All right, so today was Tuesday, April 24th, 2018. And the thought that I want to leave you with today and then just go is adversity creates opportunity. As you know, or if you've been following me at my blog for any length of time since the beginning of this year, I have been struggling trying to get or understand how to effectively take on a long. Today I was able to catch it for 53 ticks, but it was in the practice account. Actually, it was 72 ticks with 17 ticks of I caught it for 72, had lost 17, but I've been trying different things to see what works, what doesn't work, what can I throw out, what can I keep. And what I've come to conclusion right now is pre-market to, excuse me, I do have manners, by the way, but I burp and fart like any guy that I know of in my, or woman, I guess in that case. So I have my flaws, and there are many. Anyway, one of the thoughts I had was volume, and volume of what volume figure do I need to see at minimum to start a trade sequence? Now, in the past, I used to look at 500, then I went up to 750, and now I'm apt to think that that volume figure to start anything should be up over 1,000 to start any sequence or to start any type of trading thing that I'm looking at doing, because I've noticed that most of the opportunities, and like I said, um, the best teacher that I've found in trading, especially here at Top Step Trader, is the School of Hard Knocks, is learning from my mistakes, my errors of omission, my adversities that I have, but all of it is a learning experience. And I'm not making excuses. I like what Kip said yesterday, you're making excuses and whatnot. So what I am attempting to accomplish is that I believe that I'm strong on the short side of the market when the market wants to trade down. But I'm weak as it relates to the long side because more times than not, I pick a point that it runs to and then it takes me out. Like today I was running anywhere between a 9 to a 9 to a 12 tick stop loss, and I accumulated 30 something ticks of loss in a matter of just all pre-market before the 8 o'clock open at the Central Standard Time open, which didn't leave me with a lot of opportunity to correct it because I was only able to take on one trade at that point at the open of the market. So, and what I looked at was what was like yesterday as opposed to what is today. Like yesterday, there was a blue bar volume of 1,600. Today, I don't think there was 1,000 print until after or close to the open of the market, or maybe it was a little bit later. I'll have to go back and look, but um, maybe what I'll do later today, like I did yesterday, I'll just do a day trading recap of the day itself and show you where I went right and obviously the areas that I was wrong. And where I was wrong, I was trying to come out on the long side around the 70 mark or so. I think it was around 68.70. My true long signal that I caught today was at 68.53 after it posted a low of 46 or 47, somewhere in there. It made, like it did yesterday, it made a bottom and then it made another bottom, but it didn't crest it by much. So it it formulated, and on the other side of it, there was no high blue bar volume to drive the market down until actually later in the day. If you look at the charts now, the blue bar volume has actually brought the market back into 68.50 range now. So it's actually brought it back lower than where it was. I think it actually made a new low. Yeah, 68.44. The blue bar volume printed 3,000 and another 2,000 something up at the highs around the 30. It crested, I think, a new high. I think the high was 69.33, and it went up to 69.38. So it busted the high for like by 5 ticks, and then it sold off. Kind of like yesterday, it busted it by a little bit, then it went straight on up. So that type of trading makes sense to me. Why did it sell off at 38? Well, it's only the second time pretty much that we've been attempting around the 69.55 mark, which is the current high. So it's probably going to need a lot more strength to get through. Now, I thought today might be the day that it would just blow through it with the way it went up yesterday. But obviously it needs more when you saw the volume, and then it kicked in and then it sold off. There was opportunity to make a nice trade on both sides of the market today. For me, I might have to go through another combine before I get things together. And really what I'm trying to accomplish as an overall goal is to find a way to effectively take on the long situation. So I thought, as I've been, and nothing's better than a live market and having skin in the game, is, in my humble opinion, to see what works and what doesn't work. So, skin in the game right now is the $150 combine, and I'm not down, like I think my count's at 29.3 right now. So would you rather be down $150, or would you rather be down $700 or $800 or $1,500 or $3,000 or $5,000 trying to test out your theories in the live market? So what I believe I've accomplished on one side is how I want to take on the short. I've got that, that's in my trader's toolbox. That's packed safe in there. I know, like today when the market printed up 2 high blue bar volumes, I'll go over the short side of the trade a little bit later when I put up that recap. And I'll talk about, I guess what I'm going to talk about is where I screwed up, my understanding of where I came from. So the 3 words that I led off with is adversity creates opportunity. So if you continue to make mistakes and errors and start learning from those mistakes, that's how I learned how to become a short side trader and become very efficient and very good at it. Likewise, I've got to relearn how to become a good long side trader and what a long looks like and where, because I picked points. I believe the market was going to go up. It did. The problem is that it nickel and dimed me before it went up. So recognizing what does it look like, what do I need to see, where do I find value, and how do I approach and get in to the market that I believe is going to go up, as opposed to when I know the market's heading down, I know what that looks like and I know how I want to attack those markets. That's pretty easy when it comes to it because I got accustomed to learning how to. By the way, I don't believe we ever crossed R1 today. So we stayed in between the pivot point and R1, I think. Let me double check that. Yeah, we stayed below R1. It went up to, looks like it went up to 69.38 today. And R1 is at 69.59. So we got within, and there's 69.55 too. I don't know if you can see that or not. It's right here. This is the high of the market back for a few days ago, and this was R1 today at 69.59. And now obviously we're trading down and lower. All right, what do I need to do? I need to hit the A button. Okay, and then I need to go to home. And so right now we've posted a low of, looks like 43, 68.43. So it's made another low. I think the low prior to that was like 46 or 47. So I think the best way to approach trading is, like I've talked about previously, is to have your educational budget set aside for the year, the month, the week, whatever you can afford to do. I like to set my educational budget out for the year. And part of my education right now is to, because honestly I believe the money's going to be there. It's a matter of me, once I figure it out, those little last things, and then applying that, if I can confidently, effectively, and efficiently pull money out of Top Step Trader on the rules that they put you in, I have no reservations at all that I'll be able to make money in a real futures account with 5,000 or 10,000 bucks in it. But ideally what I want to do is take the money from Top Step Trader and put it into my own account and go from there. Effectively, I don't want, I know that until you learn how to trade one contract efficiently and effectively, it's hard to trade anything more than that. If you can show to yourself and prove to yourself that you can make money with one, then you can add the second. Now, I have very specific a scenario that I'll add a second contract on a down move, but that's usually when it's trading in between pivot and S1. So that's like the mark that I always in the sand that I say, all right, here's where I would add. So yeah, I found a place that makes sense for me as a trader to add a second in the 30K, but I would tell you that 90 to 95% of my trades are one contract trades, and I'm getting eaten up taking on one contract. And most of my mistakes happen in a very short period of time. So I think that I went from -9 or 8 to -35 probably in about a 25-30 minute period of time. So what did I learn from that? I learned that I was trading in a market once again that wasn't ready to trade. There was a there was a volume print, but that volume print wasn't high enough to effectively move the market at that point in time. So it ate up my capital trying to get positioned prior to the true breakout. So I guess that's it. That's really all I need to talk about today. It's formulating. The ideas are there, the thought process is there. Now it's just a matter of applying. One of the things I kind of want to see if I'm onto something is how I handled the long setup that I did get in and make the money on. How I can apply that in the future. So that's kind of the exciting part, that although it was in my practice account, it was nice to see that I was able, if I could have kept on trading today, I would have pulled out of the hole into the positive column today, about 24 ticks or so. So that's kind of the neat thing to see, is that, learning on the job training, I don't think there's much that you can do to, if you don't have that mentor sitting across from you that's not there. The only other option you got is to read, learn, study, and keep plugging away. And that goes back to, there's some things that I've learned from other traders that I put into practice, but until you actually physically are risking your own money, you don't know how you're going to operate in the markets. So it's easy to throw people under the bus if you've never done it. If you've never traded real money, if you've never lost real money, if you never lost tens of thousands of dollars in trading, then throwing people under the bus is really not a smart thing to do, because you don't have the experience that another person has. Now, yes, I've lost thousands of dollars in trading, but I've made many, many more thousands of dollars in trading than I've ever lost. And that still applies. I mean, I'd have to lose at least $2.5 million as a day trader at this point in time in my life to outweigh the gains I've made as a trader. I'll leave you with that. This is Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. Bye for now.